Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with the weekly stock market analysis for the week of January 26th. Pretty busy week toward the latter part of the week. However, over the last few trading days during this last week, we've been in a push-pull balance area with a little still continued with a bullish trend. However, overall equities and all indices closed on a downward trajectory, but I don't really believe that the bears have stepped in to really take control. And we'll talk a little bit about that as we get into the meat of the video. However, this week's information was really pushed very aggressively on a number of major names that it released overall earnings for Q4 that were very, very bullish. However, the market absorbed those and didn't necessarily push in the direction right after those earnings that we would have expected. A classic example of that is Netflix. However, toward the latter part of the week, specifically on Friday, we saw a significant downturn where the bears stepped in, primarily news-driven, around the coronavirus coming out of China. So we don't necessarily want to make a very bearish call going into next week, but we do want to highlight a few of the major trends that we have seen over the last few days in regards to a breakout. We've been in this large trading range, so it was a kind of a 50-50 trading range where we could have bubbled up, or exactly what we saw is the bear stepped in and pushed us lower. So all across the board, all major indices ended up down on the week. And we have this information displayed out there for you. So almost all ended up down just short of 1%, with the IWM coming in just that much greater at just above 2% on a downturn. However, the Russell has had a very significant bullish trend, even more so than the overall S&P 500. So we'll jump right in and take a look at what's going to transpire in the upcoming week from our hypothesis perspective, but also kind of look at some names that are reporting this upcoming week for earnings. Roughly about 30% of the overall S&P 500 is going to report this week. So it's going to be an interesting week. So get your popcorn ready and we'll see what happens. We'll see you on the other side. As always, we'll start off with the S&P 500 ETF. As you can see, pretty consistently over the last roughly 13 weeks or so, we've been in a very significant bullish uptrend without any type of larger pullback. So what we saw this past week, specifically on Friday as we alliterated, was a natural occurrence where the market just looks to potentially rest. However, that information that was received and incorporated into the market on Friday was primarily news-driven coming out of China, not only as we walk into the Chinese Lunar New Year, but also, more importantly, the information that has come from the coronavirus as it continues to spread not only in Asia, but we've seen a number of occurrences in the United States that provided a certain level of fear for the market that had us kind of push back a little bit on Friday. And we'll look at the daily. We don't really dig into the daily in our videos, but want to kind of highlight exactly what has taken place on Friday, because it is significant for us to be able to identify any individual trends that may come from this type of information. As you can see, Friday's price action here is clearly bearish almost from the open. There was a large, very consistent, and quite frankly, very orderly auction to the downside. So we knew that the other time frames, primarily institutions, were engaged into the selling. However, it was not panic selling, which you typically see when the market is moving in a very, very strong direction. However, all of our indicators did indicate that it was a very bearish day. Now, we can see here that pretty consistently this Friday movement kind of exacerbated all of the upward price movement from the previous few days, and it was an opportunity for those that were short to kind of see some life, which has not necessarily taken place over the last few months or so. And that's something that we do want to continue to highlight, is that the market continues to move in a direction that it has been until there's something major that moves it. And I don't necessarily feel that we are in a very bearish movement because the trend has just been so strong, and we did close just that much higher toward the latter part of Friday, toward the close. So there was some buyers that did step in, but in actuality, if we have an opportunity to zoom in just a little bit, there is this area here that has showcased to us that it was an inside week where price action did not break below the low of the previous week and did bounce, quite frankly, right off of this longer term trend line that we have seen. So we do have some type of indication that there is still some potential for some upward movement. Additionally, we are so far away from our larger moving averages that this is something that could allow us to see some type of pullback. But we do want to take a look at if we do breach this trend line, which is coming in roughly about $327. Now that is relatively close to our close for the week, so there is a higher probability that that could take place. But we do want to watch that this is a very strong trend line going back all the way until roughly about the April timeframe, that this is somewhat intact. Now, as market generated information is absorbed, this is a possibility that we could see some type of downside movement, because it's a clear bearish signal, at least the initial clear bearish signal for those that trade on the weekly and certainly on the daily. But we'll watch it as we continue to move forward. We'll see it a little bit more clearly as we shift over to the Nasdaq. We do see on the weekly side, as we alliterated earlier in the chart, that we did close on a doji, which means that the bulls and the bears are in almost exact equilibrium, and there's clear indecision on what's the next direction. But it also is potentially an early sign of this longer term bullish trend is coming to some type of closure or is beginning to be a little bit more exhausted. But you still clearly have a pretty significant upward trend as we look to close out the January month, one of the most aggressive months on market history, where just week over week over week, we still have seen higher highs and higher lows. Now, this is something that we do see here on the Nasdaq, is that we have seen, a new all-time high, but at the same time, we did not breach or even dip below the low of the last week. So in essence, this still is a bullish trend. However, there are some additional signs that things could be slowing down just a little bit. As we move into this week's earnings announcements, there are a significant number of major earnings reports that are on the Nasdaq, Apple, Tesla, Microsoft, etc., that have enabled us to potentially see some downward pressure if some of those major names do miss their earnings. Conversely, we do see another opportunity potentially to move upward to all-time highs if those earnings reports are very, very solid. So we do anticipate either some sidewards or upward movement over the next few days as earnings come out, as well as an additional our Q1 2020 Federal Reserve minutes and rate decisions will come out. So this could potentially move the market as well. So this week, as we stated on the initial, this is a good week to just sit back and allow the market to move in a direction, and then allow yourself to make some good hypotheses. But we still don't believe that this will kick into a longer term bearish movement. So we'll jump over to the Russell. And we can kind of see we a little bit of a busy chart, but we wanted to kind of showcase a little bit of the analysis that we've done, as we have been very, very bullish over the last number of weeks on the Russell. We continue to see that upward movement, but at the same time, we've seen a nice little pullback roughly toward the latter part of December, and then a nice explosion over the last 2 weeks. And then just last week, we've seen in unison with the broader market a little bit of a pullback. But we don't necessarily anticipate that continuation, because we did see, as we saw on the other indices, an inside day where price did not move outside of its original range. So you can see the low of this past week did not break the low of the previous week, and the high of this week did not breach the high of last week. So we're kind of compressing into this consolidation type range that could allow us to see some larger movement coming in to this upcoming week. As we stated, this earnings week is very, very significant, and it could cause us to move upward or downward. We're in this equilibrium kind of balance point, and we don't necessarily see a clear direction. However, we do recommend the trend is still intact until it's broken, and we haven't seen those consistent signs that the trend will be broken moving forward. But we do want to watch. There is an opportunity for some type of support coming in roughly about the $164 level. So we do want to watch this area here as a potential bounce. But we do see how it kind of closed on the week above our 9-period moving average, which does showcase a little bit more of a bullish signal that it could not break out of this longer term trading range that we have been seeing over the last few weeks on the Russell in this area here. And that's something that we do want to emphasize, that this is something that is pretty consistent. Now, at the same time, as the broader marketed indices have decreased, we have seen a very consistent and energetic push upward in regards to gold. So we have a long position in gold, and we will continue to kind of hedge our S&P and broader indices positions with gold as well. And we can kind of see this very consistent potential kind of cup and handle, if you will, bullish movement over the next couple of weeks. Now, that is correlated to the either upward or downward movement of the broader indices. So typically gold is a safety mechanism where institutions and even some retail traders will invest in to kind of hedge themselves if they do believe the broader indices will be continuing to decrease. And we have seen that a pretty significant run over this past week with gold jumping up with a range of just a little bit short of 3 points throughout the week. So pretty aggressive move for gold, but we did anticipate that and did have an opportunity to take full advantage of that as well. So we'll just jump in to kind of look at a few of the upcoming earnings reports for this week, as well as just looking at one major company that did report this last week, which the overall market did absorb the earnings news, which was very, very bullish. But at the same time, the market did look at it as an opportunity to kind of sell off. Coming in from Netflix, we did see a pretty sizable gap that was immediately erased over the next 2 days. And we have seen a very strong movement in Netflix. Just on Thursday, we saw a pretty significant range of almost 25 points to the upside, which is rather aggressive if I'd say so myself. However, this does butt right up into a longer term trend line that could showcase a little bit of resistance and potentially a pullback. Even if we extend that out just a little bit longer, you can see going back toward the middle part of last year with a high of $423, we see a pretty consistent trend line that has a potential of breaching itself. So we'll mark out this high here, this high here, this high here, and definitely here as potential rejection points. But at the same time, this high that was just received over this past week aligns right into the point of control, which is the highest volume area over the last 3 years. So it is a fair price and a particular target for some of the bulls that got in toward the latter part of October with this huge bullish run that has taken place. So this is an opportunity for some profit taking, but at the same time, we keep knocking on the door to try to push Netflix a little bit higher. So there is a possibility, given other companies that will be reporting on the Nasdaq, this is an opportunity potentially to push just that much higher. So we'll watch Netflix. Obviously, they reported last week, but there is some pretty big names that align with them. So we'll take a look at the big boy that was written off by a number of institutions, and quite frankly myself, that has just totally shocked us. And anyone that is shorting Tesla right now, you are feeling a lot of pain. So that's something that we want to continue to look at. And there is this opportunity for this continuation, but we did see a little bit of sell-off in the last few days as profit taking is taking place. And certainly on Friday, we did see a little bit of that as well. We'll jump over and take a look at Microsoft. We'll just review these just relatively quickly. So Microsoft, obviously, as a industry leader, has continued to see some bullish movement as well as the broader market. But we did see this past week a little bit of a potential pullback, but a very high probability that Microsoft will beat, as they have consistently done that over this past year. So we'll take a look at Starbucks, one of my favorites. We have seen a little bit of consolidation, but still a bullish breakout over the last 2 weeks. And we did bump into right at our resistance line that we have identified for Starbucks. And this is an opportunity for us to potentially look at a downward movement for Starbucks, but we'll watch that as well. It's on our radar and we'll adjust accordingly. Obviously, the big boy Apple coming out this week. Now, very busy chart here, but this does align to our Fibonacci adjustments. Is one of our key indicators that helps us identify potential resistance and support zones. But if we erase that, we can kind of see this bumps up to the 161 extension, which does align to the broader market selling off. So we do anticipate a continued bullish trend from a earnings perspective for Apple, but we have moved so far so aggressively. If there's any indication that Apple will not continue to move aggressively, there should be some type of sell-off with Apple. Very similarly on McDonald's, that's reporting out this week, aligning to a pretty consistent probably cup and handle. So we anticipate a little bit of pullback, but then this bullish continuation potentially to all-time highs within McDonald's. We'll take a look at Visa. Visa was a nice potential short opportunity toward the latter part of the week, but it did close very positively on the week. So we did see Thursday and Friday with a nice little sell-off. So we do anticipate some positive results coming off of the Christmas holidays. A lot of people used their Visa to report or to purchase a lot of items. So we do follow that there's an opportunity there. If we jump back to the weekly on Verizon, we do see a little bit of consolidation, potentially a little breakout over the last 2 weeks that's failed right at our 9-period moving average, as well as we are very close to our point of control. So it's a very fair price. So we do see, if there is any indication for some news on Verizon this week, we do see a potential sell-off down to 58 area, which coincides with a low volume node, but then also our 50-week moving average. So just a few names that we wanted to kind of highlight that we will be watching over the next few days, and very aggressive this week. So I'm personally pretty excited about what is going to take place this week, and we're going to put positions on accordingly. At the same time, we do want to make a broader announcement on some of the exciting things that are happening here at Carl A. Smith Holdings. So we'll talk about that in just a moment. But at the same time, as with everything, it's your money and it's under your control. Take care.